Hey, well, happy Thanksgiving. It's that time of the month to take a good look at what went on in the September marketplace for Calgary real estate. And you'll notice that right on my screen, I decided to start with something different this month and show you what we're seeing as far as our benchmark prices for each of the quadrants in Calgary. Now, these numbers, by the way, they include condominiums. But it's just really interesting to look at this. So the north at 545,400 is up 9.1% year over year. The northwest at 611,900 is at 9.1% year over year. Northeast at 482,100. Wow, 15.9%, and primarily due to the fact that it's affordable. In the city center, interestingly enough, is only up 4.4% at 597,300, but there's a lot of condominium in those numbers. The west, it's always consistent, but 685,300, and it's amazing how the northwest is starting to catch up to the west at a 7.9% increase. The east at 393,300, same idea here, 19.9%. You got affordability here. So you've got the majority of the buyers are looking at buying in these areas because, especially with the rising interest rate, this just make it more affordable to get into that market. Down in the south at 9.5% increase at 553,400, and in the southeast at 562,500 at 9%. Which, interestingly enough, I mean, these are pretty affordable numbers too when you're seeing, 553, 562. So there's still some pretty good value in those areas of the city. Let's take a look at this chart right here and give you a really solid numbers here, which will help you understand what exactly happened. And it was a really strong month, one of the strongest I've ever seen for September. You see in September of 22, we did 1,893 sales. But remember, last year, interest rates were rising and a whole bunch of people thought that the market was going to fall with rising rates. And it's a good example of why people can't predict the market. Nobody can, because I can tell you there was a ton of people that were sitting on the sidelines in September last year waiting for the market to fall. And instead, the market went up, and they were all wrong. We did 2,441 sales in September this year. I mean, that's 28.95% increase year over year. This would have been a better number. Probably like a normal year would have been around 2,000 to 2,100. So it was slightly low because of the perception of those people, like I just mentioned. If we look at year to date, we're still down at 11%, 11.43%. We're down from the volume that we did in 22. But if these numbers keep going, we're probably going to, I think there's a good chance we're going to end up doing the same numbers that we did last year. Primarily because, as just mentioned, we had a slower fall, where this year our fall doesn't seem to be slow. Now, look at new listing inventory. A year ago, 2,624 new listings hit the market. We saw 3,191. However, we had 4,463 listings, and right now we were at 3,369. So we're still down 24.51% in inventory. And overall, year to date, we're down 30% in inventory. So that's giving us only 1.38 months supply. That's down 41%. That's just not enough supply to meet the demand. And that's why you're seeing these 9% price increases and, in a lot of these areas of the city. And of course, you saw in the Northeast some of those big price increases because we definitely don't have enough lower priced real estate to meet the demand. So with that kind of strength of a market and that kind of a demand and not enough supply, there's only one thing that prices can do, and that's go up. And overall, we saw sales to new listings at 76%. So that's up 4.5%. That's pretty strong. And if you take a look at this, and this is indicative of what I'm talking about with a really strong market, the sale price to list price, look at that, it was over 100%. And this is really catching a lot of people by surprise because I know, for example, we had a buyer that came in from Montreal and we were trying to help him buy a place. And he kept coming in below the asking price, especially on the lower priced real estate. We're trying to find him a townhouse. And they were all selling for more than the ask price. So the offers weren't accepted. And then finally, you know, he realized I'm going to have to be more aggressive when you're competing, because most of these properties that we were writing on, I mean, they had 3 bids or more. And that's indicative of what you're seeing here. So this is making it really difficult, especially for lower priced real estate. Higher priced real estate in some sections of the market, you can still negotiate. But the lower price, especially the townhouses, it's going to be pretty tough to negotiate when you're competing with other people. But that being said, I do have some strategies, and this guy did follow my strategy on how to get our offer accepted. You know, there's just little things that you can do, like having a letter, like being able to have a proper pre-approval letter. In some cases, we're able to go in with an offer without putting a financing condition in. We want to minimize the amount of conditions. My relationship with the other agent can really make a difference. And I happen to know a lot of realtors in town, and they know that I bring good buyers to the table. Those things can all make a difference on getting your offer acceptance. So just keep that in mind if you're looking at buying. And you can also see here our median price is at 505. That's up 9.78% overall. Our benchmark price is up 8.69% year over year. So the benchmark price is really just taking into account a typical property in Calgary. That's really the metrics. Whereas the median price is simply they factor in how many properties sold that were higher, how many properties sold that were lower, and that gives you an idea what that number is. And the average price, of course, they just average it all out as to, you know, if you've got some of the higher priced real estate in there, it can really bring up the averages pretty quickly. So I actually don't like looking at average price. Benchmark price is really the best number to look at. This chart right here, always like looking at this. The blue is our inventory. So we are seeing that we're getting a little bit more. We're on the rise, which really we need that. And I'm really got my fingers crossed that we will see more people starting to list their house. I really think what's happened right now is there's a ton of people that are sitting on interest rates that are lower. They're locked in at 2.6 to 3%, and they're reluctant to put their house on the market. And I think as a lot of these people come up for a mortgage renewal, you will definitely start to see more inventory hit the market at that point. Some people even believe that we're going to see a correction in the market because of that. It's really hard to say. With all the people moving to Alberta, can't really predict that, but I do believe that we're going to see some more inventory for sure. So that's our month supply right here in blue. And of course, our benchmark price for the month is here. That's why this chart is a bit choppy, because it just goes looking at each month. All right, let's look at another chart here. This will be helpful. All right, so there's my website, in case you don't know, that Rob Venno team. I also have view calgaryareahomes.com. Both of these sites are excellent, but my robvennoteam.ca is loaded with market data if you want to take a look at that and look at what's available. All right, here's my favorite chart to look at right here at our absorption rate. And this is detached homes that we're looking at. So we had 68.93% of the properties listed sold. And that is slightly down over here from August, which was 71.84. And that just simply means that, 31% of the houses listed didn't sell. And you have to really ask yourself the question, why wouldn't your house sell in a market this strong? And I can tell you most likely either the right buyer was not attracted, so maybe there was a marketing issue, maybe the property really wasn't looking its best and that affected the perception that buyers may have had of your home, or maybe your price was just too high. It's usually one of those three things. Benchmark price for detached came in at the highest we've ever been, at $696,100, and that is up 11.09% from September of last year. And you can see by this chart just where we're headed. I mean, we just keep right now for the detached market, and it's still a really high demand market. That's for most people, they do want to own a detached house. So we're climbing, and it's not seem to be slowing down. And when you look at these numbers, it's no wonder, because that's here's the hard data: 1,147 out of 1,664 sold. So slightly down from August, but really that's a pretty strong September. And because typically we don't see that many detached houses sell in September. And our average days on market for a detached is 25. So if you're selling and you're still sitting on the market after 25 days, you got to really take a good look at your situation and see if your house is positioned properly to sell, because there is no reason why your house shouldn't sell within a month. Unless, as I said, maybe the right buyer hasn't walked in, maybe your price is a factor, maybe the property could be improved upon, maybe the marketing could be improved upon. It's usually more than just one of those as to the reasons. Now, this chart on the market distribution, as I mentioned last month, if you saw my video last month, I said, 600 to 700,000 is going to take the top spot for the highest demand price point of real estate in Calgary for a detached house. And you can see we are edging there. We're probably going to hit it next month. So 23.5% of all the listings sold in that 600 to 700 range. 23.77 sold between 5 and 6. So, almost 50% of the market was in that $500,000 to $700,000 range. So it's no surprise, but you can see as this demand is still here and prices continue to rise, then that's why this is going to be top spot. And amazingly to me, to see 700 to 800 at 15%, and the 400 to 500 is starting to go by the way of the dinosaurs. So this number is going to keep getting higher. This number is going to keep getting lower. And you can see even 300 to 400 is almost a thing of the past in Calgary. Moving over to the luxury market, I'm still amazed by this. And I've had so many people that were shocked to see just that the market is so strong in the luxury market. Because that people say, well, how do people afford these luxury properties? Well, I can tell you from owning a brokerage and seeing a lot of the transactions that go through, it's amazing how many of these properties are being sold where the buyer does not even require a mortgage. So there is, I would say, maybe you don't hear a lot about this because we do, the news loves to report on all the people that are really hurting because of inflation, really hurting because of the higher interest rates. But you've also got people who are profiting from this inflationary period, and they're buying these houses now with cash. And there's a lot of them, because that's almost 7% of our market. That's a lot. That's 709 properties have sold this year between $1 million and $1.5 million. It's a really strong market. Now, I was really amazed to see that this listing absorption rate on semi-detached, so these are attached homes that do not have condo fees, otherwise known as a duplex, 64.75% absorption rate. Last month was unprecedented to see it at 79 and then even 82 and 89 in June. I just cannot believe these numbers. But coming into September to still see 64%, which is almost the same demand for these kind of properties as detached is really quite impressive. I didn't expect that. And look at the benchmark price; it's climbing to 621,300. And you'll see in a minute when we look at the market distribution, the demand for the inner city attached properties is just really quite high. I mean, we saw 11% increase year over year on these properties. So, I mean, it's amazing when you think that in 2020, we were down at 389,000 and now we're at 597 for the year. This number is just for the month. This number is for the year. So this is just incredible, the growth that we've seen in the semi-detached sector of the marketplace. And here's the numbers: 191 out of 295. So the majority of these properties are obviously selling. Not quite as strong as it was last month, but these are still just phenomenal numbers. 26 days on the market on average. And look at this market distribution. I mean, yes, you can see that 500 to 600 is really an affordable price. So there's a lot of these properties now being sold, and you can see builders have gone this route too in a lot of these newer developments, because they've recognized, yes, there's a demand for this. They can build these homes for a little bit cheaper, so they can meet the demand of that $400,000 to $600,000 price range, because these two numbers right here are almost 50% of the market, from 4 to 600. But getting back to what I mentioned about the infill market, I mean, that's 10.51%. 191 have sold in that $800,000 to $900,000 price range. And even look at some 74 have sold $1 million to $1.5 million. So this is just a really healthy market. And I think we've just got to a point where maybe we've just caught up to Toronto, because for years and years and years, people bought semi-detached in Toronto's and never even thought about it. At one time, it was not really something that in Calgary people really went after. It was looked upon as, I don't really want to be attached to my neighbor. And that mindset just seems to have now gone out the window. All right, now we're back to townhouses, and this is just off the charts. Practically the whole year, as you can see. I mean, the absorption rate, another 102.85%. Any townhouse that's coming on the market is selling. Our benchmark price now at 419,000. I can't believe this. I mean, we're up 17% from a year ago. I mean, that just absolutely catches me by surprise. I'm blown away by some of these townhouses. It wasn't that long ago that they were selling for 250,000, and now they're up around the high 300s in a very short period of time. But that's why you can never predict these markets. It's just unbelievable how many people have moved here, and how many people have all of a sudden wanted this type of property. And so we just can't keep up to the demand. It's just too strong of a demand. I mean, look at in 2020, 278,000 was the benchmark price, and now for the whole year we're at 389. So here's the hard numbers: 397, 386 listed. So you can just see that you can't keep up to the demand. Literally just everything that came up, sold. I mean, that was over the month. That's how many listings that we had. So all the new listing inventory ended up getting sold up as well. So so if you have a townhouse that you're thinking of selling, there's no question, you're going to have no problem selling it. But what you do have to factor in is, what is the best approach when you have multiple offers? What is the strategy you're going to use? Do you want to do a silent auction? Do you want to do a public auction? How do you want to play one buyer against another? Which offers should you accept? These are strategies that I go over with people all the time, and I've lived in this arena a few different times in my career in this market. So feel free to reach out to me if you've got questions around that. Back to if you're a buyer, yeah, it's tough. It's really tough to get into this market if you're a buyer. It goes back to what I said earlier in this video. You've got to have a strategy. Those relationships I have with other agents really pay off. Having a letter, having a picture of yourself, showing who you are, being completely qualified and ready to go, minimizing the amount of conditions you put on the offer. These little factors can make all the difference in the world at getting your offer accepted. So really think about that when you're buying. And definitely feel free to reach out to me as well if you have questions around that. One thing you do have to keep in mind with these townhouses, they are also condominium. So you do have to factor in the health of the board, and it's really important to know that townhouse well. And I'm seeing people that are putting in offers without conditions on looking at the condo docs, which in some cases it does make sense, but there is a risk there. It's helpful though if you're dealing with someone that really knows the building and you can actually look at those condominium documents or have access to some of them when you make your offer. So that's a little bit of tips for you as far as buying these go. Here's our market distribution, and no surprise, the biggest area of the market is 300,000 to 400,000. But wow, it sure has increased at 400 to 500. It drops off a cliff going to 5 to 6. But this is a big driving force behind it, is that bottom line is these are affordable. You get to have a basement in most cases. A lot of times they have a garage, so I think it's that it's as close to living in like a semi-detached or a house as you can possibly get, because you don't have the common areas that you do for a apartment style condominium. And I think that's a big reason why the demand is absolutely so high. All right, last but not least, let's look at the apartment condos. Same story, 68.95%, which is not as high as last month. Last month was a record. I mean, I never saw a 90% absorption rate in the 24 years that I've been doing this. But 68.95% is still, for apartment condos, is just absolutely incredibly good. Our benchmark price last month hit $312,800. That's up 14.87%. And all the people who bought those condos in 2015 are really happy to see those numbers. Because if you look, 2020 during COVID, it was 244, and this whole year, if you look at where we're at 296, and that is now taking top spot. I mean, because we finally surpassed the 2015 record that we hit. We had all those dark years where it just went down and down and down, and now we are finally back up. It took a long time, but we're here. Here is the hard numbers. 706 out of 1,024. So there's no reason whatsoever that your condo shouldn't have sold last month. So if it didn't, there's got to be some reasons why. And as I mentioned already, price, condition, marketing, all of that has to be really looked at for sure if your condo hasn't sold. 28 days on the market, that's not a long time. There should be no reason why your condo shouldn't sell in that amount of time. And you can see that the most popular price range obviously is still under that $300,000. This is where a ton of first-time buyers want to get into the market. So it just kind of drops off a cliff, even if you go to 3 to 4, and then we just don't have much of a market past $400,000. It's the bulk of it is right here in that $200,000 to $300,000 price range. So if you are a first-time buyer and this is the price range you want to be in, I really know condominium as well. I've sold a lot of them. There's a lot of ins and outs to condos, and I want to say this: we have some fantastic condos in Calgary. We also have some terrible condos in Calgary. And what I'm seeing is there's such a desperation to get into some of these buildings. I'm seeing some buildings that I know have concerns, and buyers are buying in there, and it's just because it's affordable. They don't know what they're doing, and they might not be getting the right information on whoever they're dealing with and understand the risks of those buildings. But to give you an example, I mean, I have one client right now that bought their condo not too long ago, and there's a $34,000 special assessment for every door. That can really catch you off guard if you're unprepared for that. Some of these condos need some work, and you can get hit with a special assessment that can be very costly. So you really want to be working with someone that understands condominium. So hopefully all this information was really helpful, and everybody have a wonderful Thanksgiving, and we'll see you again next month.